Studio in just a bit to chat with who better than Rakesh Arora, founder at Go India Advisors. He keeps a very close eye on what's happening within the cement pact. So let's chat a little bit about all of this with him. Rakesh, hi, good to have you in ET now. And, like my colleague was just highlighting, solid price hikes in both April as well as May, followed by now a partial rollback in June. Where are cement prices headed?
So, say cement prices normally during this busy season, which is Jan to June period, head upwards because one, capacity utilization is much better, and number two, companies are gearing up for the monsoon season, so they want prices to be higher before the lean season kicks in. So we are seeing price increases being attempted both in eastern India and southern India. These are the two regions which were lagging in Q4. So if you see Q4, there was a good spike and in margins for all the companies. But South India and East India were still lagging. So large part of the price increases in Q1 has happened in these two regions. Normally, it's a normal course of action that they try to increase, and then there's some rollback, then they try to increase further. So, that's the normal process. You try to increase a lot more than what you want, and then, the trade doesn't really accept those kind of large price increase, it comes back, but still some sticks, some of the price increase sticks. So I'm sure that they will be trying another attempt in June also, before monsoon really kicks in its full form.
But if you talk about that, Rakesh, monsoons, they already seem to have kicked in most parts of the country. We've seen an early monsoon this year. So after the busy period that you were just talking about, this quarter and perhaps the next could be marred by these early monsoons. Help us understand if this early onset of monsoon could dampen volume growth in quarter 1, and perhaps could there be more price cuts on the chart?
Yeah, so volume growth in Q1 would be slightly muted as compared to what happened in Q4 and all. So we are expecting around 5-6% industry growth rate. But see, the larger companies like Ambuja and UltraTech, they have done so much of acquisitions. So for them, the growth would be higher. But industry would grow at 5-6% for Q1. And we are largely, through with Q1, as of now, and prices are slightly higher as compared to last quarter. So Q1 is, safe. There's not much of an issue. It's only in Q2 and Q3 that prices might come up, but that happens every year. So there's nothing much to worry. And I think overall, when I look at the sector, things are looking much better. Because now I see competition intensity actually coming down a little bit, and that augurs well for price increases to hold going forward.
Rakesh, but if I just look at the three largest players, right, UltraTech, ACC, Ambuja, they've all reported strong double-digit volume growth in the fourth quarter, right? What's the outlook now, though, for FY26? Where is it that you see their volume picture headed?
So, see, as I was mentioning that because they have done large acquisitions in southern India, both the companies will report mid-teens kind of volume growth in FY26, but the industry growth would be 6-7%, and because they are they have additional capacities which were already selling in the market. So like UltraTech has taken over India Cement. Now India Cement volume was already there in the market, so for them it is a growth, but industry doesn't really grow that much. Secondly, for Ambuja, again, they also have, acquired Orient, Penna and Sanghi. So they also have additional volume coming from these. So for their numbers, they would look like mid-teen growth, but, industry will grow at 6-7%.
Had this recent news flow trickle in about the West Bengal incentives being rolled back. At least that's what we're understanding right now. Now, some of these major cement players, the likes of Dalmia Bharat and Ambuja, they stand to be impacted because from what we understand, they have incentives worth more than 200-250 crores each left from this government. How are you seeing this pan out for both of these companies? And do you believe that a legal battle is something that could follow from here on?
I don't think Ambuja sector would be impacted that much because they've largely exhausted their incentive. The only small amount is left. I think it is largely Novoco, Shree Cement who have a new capacity which are coming, and they would be impacted a little bit more. But I don't think this retrospective removal of incentives is going to stand in the court. So I'm very sure that these companies will approach court. Government can't really, have incentive policies and then roll out after the capex has been done. You can't really do it removal retrospectively. So I'm sure that courts will rectify this mistake done by the government. But sentimentally, it could be a little bit dampener in the near term.
Okay, so that's the view coming in on the cement sector. But Mr. Arora, because you also track metals very closely, we had some latest developments that came in from China in terms of macroeconomic figures, and they continue to remain very slow. What is your view on the Chinese economy and its impact on the metal sector globally?
So I think China is doing whatever it can to support its economy, and that is reflected in commodity prices remaining reasonably stable. Obviously, there's also hope that they might stitch up some agreement with the US, so that would take out the overhang. So in the near term, I would say that metal demand supply is finely balanced, and probably things are going to remain stable at these levels. I'm not really seeing a big up move in commodity prices, but they are not going down either also. So a lot will depend on how US and China tariff war actually plays out. If that is settled, then maybe there's a leg up.
And within ferrous and non-ferrous, if you have to choose one set, where will your bets lie?
So see, the tailwind is with non-ferrous because of the shift to renewable energy. So I think when the investors are well off by staying along with aluminum and copper, that kind of commodities, they have decent demand and supply support.
Right. Rakesh, I'm going to take my chance here. I don't know if you really track rare earth minerals or not, but what's your entire stance on how big a issue this is going to turn out to be? Because, I mean, this is kind of an artificial situation created by China to try and, get things done with the US with regards to tariff and a whole lot of other things. But since India has the reserves, do you think India can really up the game when it comes to processing? Because processing is the key thing which, China holds close, with 90% of the processing of rare earth minerals being done by China alone.
So, rare earth minerals are very difficult to explore, mine, and find. And it will take a long time before, India or other countries are able to ramp up any kind of production. So in the interim, there's not much of a choice but to resolve the issues with China. But maybe over the longer term, there is a case. So we're also hearing that government is coming out with a PLI for rare earth. So those are the steps which the government needs to take to augment domestic supplies.
Thanks so much for joining us. On that note, we'll let you go. So, well, that was a